Welcome to another day in the Matrix. This is a Red Pill podcast, number 43. It's been a tough past couple days in the market, so in this video, I'm going to be breaking down how I'm perceiving what's going on, and also going to start out with a little bit more of a philosophical explanation behind bull and bear markets. I believe that is extremely important for us to talk about. It will answer a lot of questions that people have been having lately, and also it's necessary to deconstruct such ideas as a bull or bear market, because a lot of the time it really dilutes what's going on and it makes people unable to create their own investment thesis and be able to react to big swings in the crypto market. So I think this one will be very helpful because it's going to solidify a lot of the missing areas that people might have when it comes to answering this idea, whether we're in a bull or a bear market. Now, I do want to start out by apologizing if my voice is getting bad progressively throughout this video. My voice was really awful a couple days ago, so there might be some times where I need to pause this and just, drink some water real quick. So I'll let you guys know whenever that happens. If there's any awkward moments of silence, it's just because of my voice. So I'm going to do my best to get through this. I actually purposefully didn't make any content or do a live stream this weekend because I wanted to make this podcast the best that I possibly could. And, first things first, we actually were prepared for that date yesterday, the 22nd. I made my last video about it. Just a very quick recap. Going from Rosh Hashanah to this day of January 22nd was 137 days, and 137 is the 33rd prime number, right? The other two important notes were, first of all, it is the 22nd day of the 222 year, in the Hebrew year reduced down to 22. So it's this Rosh Hashanah started the Hebrew year of 5,782. 5 plus 7 plus 8 plus 2 equals 22. And this was a big connection that I made along with the days left in the year, which was 343, and that is 7 times 7 times 7 gives you 343, and the sevens are all about Shemitah. And this Rosh Hashanah date right here was the start of Shemitah. Again, 137 days brings you to the 22nd of January. That is the 33rd prime number. 33 is a number used in transmutation. It's a number that is the explanation behind transmutation from a numerical perspective, from a more esoteric perspective. And this number, of course, is used in Freemasonry and in a lot of other things, actually. But I was warning people about this date pretty much for over a week now, and we saw this day come to fruition. We saw what it did to the market, again, furthering the power of the code. And I was actually quite happy to see some people reached out to me over the past 24 hours. And this was the same thing that happened back on the 5th and 8th of January when I was warning about the 666 days since the C-word crash. Actually had an overwhelming amount of people reach out to me thanking me because they were, exiting some positions and de-risking. And that's been kind of my modus operandi since the start of the new year. When we didn't get the blow off top in Bitcoin and we didn't see that huge shift of liquidity into Ethereum, we had to reassess what was going on. And anyone who's been following these Red Pill episodes week after week since the December 4th eclipse, you're very well caught up in my work and you know exactly how I've been perceiving this market and what we've been changing since. That's first thing that we need to talk about is the people that they get fixated on a specific timeline and they don't want to be flexible. These people are really they're gonna sink at a time where other people are trying to swim. And I'm not being disrespectful. I'm just, giving out the red pill. You need to be able to have a plan B, plan C, plan D. You need to go about investing with a very long-term time horizon and have multiple variables possible. But one of the number one things that, in my mastermind course, I discuss this very thoroughly. You need to be playing with money that you're willing to lose. Second, you need to be playing with money that you could at least wait on for, a year up to 5 years. And this is just a small time horizon when it comes to investing. Believe it or not, the biggest purpose behind investing usually was parking your money in something like a retirement fund, something that has a very long time horizon and you can be able to accumulate over time by dollar cost averaging with any excess money you have. This was what investing used to be. And since the invention of pretty much technologies, having phones where you could invest on Robinhood and all these phone apps, and then of course cryptocurrency, it's skewed what investing has truly always been. And when I was studying how to do technical analysis, I learned the Wyckoff method from Richard Wyckoff, which he was alive 100 years ago. And all of my investment thesis and strategy, I was studying OGs in the market. I was studying people from back in the day who were investing, and they were describing an investment as I just did right there. Basically, it needs to be something that you have a very long time horizon and you're willing to live through these swings in the market, because that's just the way it goes. There's bull and bear markets if you want to perceive it so, myopically. But if you really want to examine what's going on in the big picture, you're going to make some amazing breakthroughs. And first and foremost, we have a fiat-based economy, which is basically ran through QE, quantitative easing, and the Federal Reserve System and the central banks perpetually print money, diluting the money supply, and therefore making stocks or risk assets go up over time. This has not changed in over 100 years. Nothing has changed. So bull and bear markets and this concept are very short-sighted, and it's really not how you should comprehensively observe a market. Again, I apologize about my voice. I'm really going to try to power through this one. But anyways, I wanted to reiterate this date right here because I warned everyone. I was preparing everyone. I told everyone how I was perceiving this date with not only one connection, with multiple connections. And then, of course, bringing it to this date today, which had the 66 date numerology. And this was the day in Australia and New Zealand when it was the 22nd for us. So again, this 66 connection here, and then we had the last day of Hanukkah giving us 6 weeks and 6 days, and the 117 date. And this was all in my last YouTube video, guys. I was very, very thorough. Okay, so I want people to understand that this code is magic, all right? It works. It really does. And I know that a lot of people that have made it this far through my work, you get it. You 100% get it. But for those people that are still sort of on the fence, I mean, this is month by month by month that we're able to figure out big important dates in the market through this code. And that was the whole idea behind my channel and behind my work, was to essentially be able to show people how Gematria Numerology and, of course, astrology play a huge role in how a market works. That has been eye-opening, that has changed many, many people's lives. And through that, a lot of people who paid attention to how to invest properly, how to follow basic investment rules, which play with money that you're willing to lose. Can you put this money in the market and wait on it for at least a year, up to 5 years? And 3, the concept of patience, being calm, being high vibrational throughout that process. And for the people that wanted to really generate money throughout any of this, whether it's a bull or bear market, creating businesses, using your creativity, utilizing the ideas you have, and being an alchemist with that, meaning taking an idea and converting it into something that could generate you money. Relying solely on investments is something that will absolutely destroy somebody during a bear market, if that's the way you want to perceive it. A bear market is completely, make-believe just as much as a bull market is make-believe. It's all about how you perceive it and the vibes that you have and the energy that you have during that time frame in the market. The crazy thing about crypto is, especially along the YouTube spectrum, it is very much towing the line between everyone wanting to talk about bear market or bull market as the main conversation, but they're disregarding the long-term setup. And the long-term setup is that cryptocurrency and blockchain technology is without doubt the future of money. So if you have any coins in this market, any coins at all, whether it's in, it doesn't even matter, honestly. It's all venture capital at the end of the day. If you have any coins in this market, just relax. Because anyone who watched XRP back in 2014, 2015, what it did, and I showed you guys in my last Red Pill episode how that went, or if you got into anything pretty much during the C word crash, you saw the type of gains that generated. And no one was able to call tops. No one was really prepared to see certain coins do what they did. And the drop during the C word crash was unbelievable. While it was happening, I could only imagine the sentiment on YouTube. I could only imagine the flip from everyone going completely bullish to bearish and thinking that these coins would go to zero. And it did the complete opposite, actually. So I'm going to be very straightforward this whole episode, as I've been straightforward throughout all my work, you know? And that's a sacrifice, guys. You need to understand that. I've sacrificed a lot of my popularity and a lot of the way that people perceive me just by being so straightforward and not giving a shit. Just being 100% speaking my truth. And in that, I've brought a bunch of people towards this group who've been the strongest people I've ever met. So I've learned that we all need to be 100% ourselves. We need to speak our truth 100%, no sugarcoating, be direct. And whatever you're seeing happen, you really, really need to expose what you're seeing happen. And that's always been my energy since the very early days. And I've learned a lot throughout making this channel. I've learned a lot about how sentiment drives this particular market, as it drives any nascent asset class. I'm sure during the dot-com bubble back in 99, 98, it was the same nonsense. Everyone was just fucking losing their shit all the time. And it was uncertainty and speculation over which dot-com, which tech company or which new breakthrough technology will be the winner. I'm sure that was a daily discussion, right? And if there was YouTube back then covering this 24/7, 365, it would have been the same shit you see today on YouTube would have been going literally identical in 1998, 1999. It would have been the same. I promise you. It would have been O-face thumbnails. It would have been all this clickbait. And a majority of the content out there would not be teaching anyone anything because it exists and operates on stilts. The foundation of a lot of what's going on here is not educational. It is drama and theater. I'm just being straight up. This bull and bear market thing, it's drama. It is theater. There's no education. People need to seek education and learning, because when you're actually learning something day to day, you're gaining a skill, and this skill can actually be utilized to help you determine and make up your own decisions. And that's always been how my work has been presented. I've always pushed it from that angle. And I've said this straight up many, many times. I want to be somebody who teaches people things. And I believe the code and how I've been making 40-minute YouTube videos lately, breaking this down comprehensively, even teaching the meaning behind the numbers. This was done intentionally so that every single time I make content, people walk away with at least 5 new things that they've learned. If we could learn one new thing every single day, that's over 360% growth every year. So I want to be part of that for humanity. And that's what this code has done. It has taught people how that all works. And from there, you need to make your own investment choices, as I have. So Just very quickly, when we look at this chart, this weekly chart on Bitcoin, show me the bull or the bear market. Please, I want people to. This needs to stop. The bull and the bear market conversation needs to stop, because it's what holds people back from actually doing anything with their life. You know what's on the other side of fear? Nothing. Right? I'm just being straight up. I know it's a hard pill to swallow. But all of this bear market shit is just fear. Now, I'm not telling people what to do with their money. I'm not telling people what to do with your investment. But when you're really looking at this, it just seems like the most patient person is always in a bull market. The person who just learns every single fucking year, every year, learning more and more and more and more, is always winning, because they are calculating how it's going and seeing that there's a trend here. And this trend started at the bottom at 1 penny, and now it's here at 35,000. And yes, since then, we've had huge, dramatic changes in the market, where China banned crypto, and Russia banned crypto, and India banned crypto, and Jesus banned crypto. And it just has to stop. We've made it so far, guys. And anyone who's really here for the long haul, this bull and bear market conversation just really needs to get sidelined. It really does. Because it's not helping anyone. It's not helping you. So, I hope that this really gets a certain type of person who perhaps doesn't understand how this market works to wake up. Because there's a lot of people who are really keen on astrology who've come to my work, or they specialize in, maybe they're just really into health and wellness, and they heard one of my live streams and then they started following, and then they joined the community, and that's their piece to the puzzle to add. And that's beautiful. That's what I wanted all along. I wanted a very vast, group of hobbyists, people that have a lot of skills, people that are farmers, people that are architects, people that are, that's the type of community that really thrives, is one where there's not one jack of all trades. There's just a bunch of people that are making an effort to provide value to the community with their insights, with their knowledge, with their wisdom. But I do understand that there's a lack of understanding of how markets work. And the bull and bear market conversation, it's fine to have. I am not anti that conversation, but it needs to be constructive, because a lot of people are unaware of how this actually works, which is that there's a fiat-based economy that prints forever, and the more it prints, the more everything else gets benefited by it. Pretty simple. And this has not changed. This will not change. Even if they invent a digital dollar, it will be the same concept. It will be an ever-inflating government-ran stablecoin that will operate as a place marker for what the dollar used to be. Whether it's the SDR, special drawing rights, a basket, which would be a basket currency shared amongst, it doesn't matter. It will be the same concept, because money is created out of thin air for an ever-growing population. That was the idea of it in the beginning. Nothing's going to change. And with that being said, there's going to be new things that show up time and time again, and you're just going to have to ride the wave of that trend. Bitcoin is just one of the examples of a winner amongst money systems. The reason we could call it a winner is because it has gone from basically nothing to now, have fun reading that percentage gain. No coin has ever done this, okay? And we have at least some chart history to be able to make sense of it all. And yes, if we want to if we want to dilute this down and make it black and white, we can say this was a blow off top bear market. This was a blow off top. This was a bear market. This was a blow off top. This was a bear market. Sure, yes, we can do that. We can do that all day. I'm not against it. All right. If that's the way you want to perceive it all, I just want, in the meantime, us to have constructive conversations about it, because otherwise all it is just fear, and it's not helping anybody at all. We need to be long-term investors regardless. Whether we do get a relief rally tomorrow and we start heading up to new all-time highs across the board, who the fuck knows? It doesn't actually matter though, because the people who get emotional when the market's down, that get disappointed, they're the same people that get excited when the market's up, and then they get disappointed again, and then they get excited again, and then they get disappointed again, and it's a fucking emotional roller coaster. Up here, I wasn't excited. I stopped all that because the ones who get excited up here aren't excited down here. And in order to actually navigate this market like a sophisticated adult, you're going to have to kind of relinquish this emotion. The investors that have been doing this the longest, that have stayed through, I mean, I can only imagine if we still have any OG Bitcoin people from back when it was under $100. I mean, damn. So XRP started trading around here, by the way. Bitcoin has all this history before that. And even XRP, like it blew my mind when I was examining that chart that I showed everyone when it was like 0.005 penny. It's like had almost no value. And it hit $3. So it made its move. It made a gigantic move. But it's hard to kind of like give my 100% stamp of where we are in this market right now, because crypto is so new. Even with 10 to 13 years of chart history, it is so new. And a lot of these coins are so new. And when we're just perceiving things in this duality-based bull and bear market conversation, it's really hard for people to actually like become an investor in this market. They're just gambling based on these highs and lows and the probabilities, and they're not really doing too much in the meantime. And for those people that don't actually want to learn, that don't want to learn TA, that don't want to really learn a skill, that's completely fine. If you're parking your money into crypto responsibly, week by week or month by month, you're going to see in 5 years, this shit's going to benefit you immensely. Like, without doubt, if you look at any coin that's over 5 years old, you can see the proof in the charts. So it's imperative that people step back for a moment and ask themselves, like, hey, like, am I here for the long run, or am I here just to make a quick buck and hope for the best? That's called like a Hail Mary. Hail Marys work, but that's much more like gambling than it is investing. So we are at a point right now where we've seen a major shift in the market, mostly in sentiment, definitely in some prices for some cryptos. Some cryptos have started to break structure from the lows back in the summertime, which we could consider a spring, and we'll get to that later. But I'm really interested in this setup because it's gonna drain out a majority of the players. A lot of people left around this time. I'm talking about the crypto market as a whole, by the way. I'm not talking about this community. The majority of the players started to leave around the December 4th timeframe. Then they got bored out, and then another flush out. And this flush out right here, I believe it probably will be filling the CME gap that we had down at like 33. And we'll see that tonight when CME opens. That's probably why Bitcoin's staying at this level right now. Probably going to get a fill of the CME gap, and then from there we'll see how it goes. But we're essentially back testing the support levels that we've had all throughout the summertime and throughout when Bitcoin made its first stop after having a straight line breakout. So Bitcoin structure right now is unless there's some miracle and it gets bought up to 44,000 by the end of today, this weekly close will be closing on a new closure low below the lows of Rosh Hashanah. This is a break of structure, and it's a trend reversal. It's a confirmed trend reversal. So we have multiple higher lows now, and we've broken structure pretty much definitively. Now, because of this sell-off, and because there is yet to be any relief rally along the way on this dump, this is sort of where we need to anticipate a short-term bounce. Now, can we go lower between here and that level? Absolutely, that we know that's possible, just because of the fact that the real structure comes in around 31. But with that being said, this is kind of the area that we do anticipate a bounce. With this bounce, there will be a big move for altcoins. Unless dominance comes back into Bitcoin very heavily, which I wouldn't bank on too much during this stage. Now, this sort of flush out is not completely weird because we've seen crypto do this before, where Bitcoin has had weird anomalies, such as this actually, where it had the run up, it had a long kind of like weird consolidation range with a big V shape in the middle, and then it went on to give a last move. This is not something that I'm anticipating at this time unless, we're talking miracles here. From a technical perspective, this is the end of Bitcoin's rally in regards to more continuation to the upside, but it would not be weird for Bitcoin to have a bump up to the mid 50s, maybe even low 60s, which is in alignment with things that I've shared before. Now, if Bitcoin makes a move all the way back above 44,000 and starts to move into the 50s, get maybe as high as 57, 58,000, that could bring an alt season. Absolutely. On coins that are suppressed. Okay? So this isn't completely over just yet. This is actually still a higher low. Okay? Because we have our lows down here. So I'm not giving hopium. I'm just sharing the technicals. And now you're asking, like, Jordan, what the fuck are you talking about? Like, where is this going? Okay, I'll make it very simple for people. Since we've broke below the lows right here, this is a trend reversal into a bearish trend, okay? Because since we've had our highs, we've now come down and started closing lower than the prior lows. But we actually still have higher lows comparatively to back in May, June, July, which is meaning that we're still holding a bullish structure when you zoom out, okay? So this straight line breakdown that we've been seeing with no relief rally is very awkward. This is not usual. This is very much like the C-word crash. And when we compare it to RSI, we'll be able to see some of those similarities. For instance, the RSI that we're getting right now, it's about 35. It is breaking below the structure that we had back in the summertime with a slightly higher price. And when we had the C-word crash, the RSI came into about 33 at the bottom. We're at about 36. I'm sure yesterday during the absolute lows, we were about 35, 34. And that's weekly RSI, guys. That is oversold. Getting very close to oversold. And we're talking about a weekly chart. All right. Now, the structure right here is really bad because it is not even holding the 236 fib. That is sort of the level that you want to get above. Now, would it be weird if tonight after CME opens, we quickly flash to like 34 and then get bought up to the 236? It's absolutely possible. So on the weekly closure, we can still get above that 236, and ultimately on a monthly close, we can still get above that 236. It's not the greatest thing in the world, but it is also not weird for Bitcoin to have a dramatic sell-off like this and then have somewhat of a relief rally bounce. We have yet to have any relief rally since. It's just been selling off the entire way. And that's very peculiar from a technical perspective. That's not normal, okay? So I just want people to know that. This sell-off and the way it has been going, it is not a typical way a bull run ends. It's a very extended, arduous sell-off. It's actually going on now about probably longer than this. Yeah, we're talking about 63 days now going down with no real structure being held whatsoever. It's just stair-stepping down. Now, one of the things that's interesting about this setup, this big double top idea and the sell-off that we've had, is that some altcoins have actually maintained strength throughout this entire time. One of which I believe Ethereum is a good sign because it's been holding the 236 level, and I'll show you that in a moment. And also we've seen coins that have been at all-time highs prior to this whole sell-off, and then they've started to hold the 1618 level again, kind of telling me that this bull run is getting extended out and there is opportunity for the months of March, April, maybe even early May for some sort of resolution. Right now, the straight fall down, not very normal. So let's I'll do the analysis on the weekly time frame. Yep. So this is a huge sign right here of a problem for Bitcoin. We have this wolf cross right here where the 8 is below the 55, and that's on a weekly. And this would be 2 weeks in a row of having that. The next big level for pushing down would be this support level around here, around 31. That would be all that trading down here. And if that level doesn't hold, you would have the potential double bottom. And the double bottom, you could really call anything from 31 down to 29. And then that level not holding, that's going to come down to the 200s. Okay, that would be pretty much identical to like what happens at the end of a bull run. So you can see right here, once, I know it's really murky, but this was the top right there around 19,000. Just trust me on that. And then we came down and got supported by the 200 simple moving average on the weekly chart. Okay, that's about as low as Bitcoin goes. And in this scenario, that would be all the way back at the prior all-time high. And I'm not saying that will happen, but that is technically how much lower it can go in the event that this level right here between 30 or 29, let's call it, and 31. Getting back down to these levels, though, would not be completely out of the cards. You know, to have such a thing happen would be a full-blown crypto reset. Like basically the entire chart would reset for everything. And that's kind of the setup you want for some sort of next rally. So there's a kind of a good thing within that. I know it sounds awful to see Bitcoin coming down to 31, but there would be something good to come of that, which would be a reset of the market participants. There'd almost be nobody left. It would have lost about 90% on most altcoins, and that's about the time where Bitcoin and cryptocurrency has a, it just, basically resets. So on the weekly, that's not looking good at all. On the daily, there's really no moving averages. There's nothing here to be saved besides the buyback up to the 236 with closures above the 236, or on the downside, holding this 33.32 level right here, which is a cluster of the trading range back to the full moon time frame of June and July. So it could get worse. It literally could, and it has everything to do with how the traditional markets are going to open up. The traditional markets have not been looking great. They actually have been showing signs of weakness. And you could see right here on the Dow Jones, it is trying to hold these levels, and it needs to recover from here. I believe on Tuesday, the Federal Reserve is talking, and this conversation they'll be having will probably be there to add some relief to the market because of the way the market is falling. But you can see right here, the dollar closing red, bonds closing red, stock market closing red. This was clearly a setup for a red weekend in crypto, and it had to be on that perfect 22 date, which had all those connections that I showed you. So, of course. And Tuesday is kind of where it needs to wake the hell up. You could also see this double top kind of mound structure is a little bit similar to Bitcoin and the cryptocurrency market. And just quickly to reiterate the idea that I was sharing behind bull and bear markets, we could do this again with the S&P. Oh, sorry. Let me go to the S&P 500. And you see right here, this is, I'm going to go to a weekly chart. Go to a monthly chart. So this is trading range, guys. This is all trading. This goes back to 1870. And look at the trend. All right. Yes, there's dips and valleys along the way. Yes, there's a blow off top there. Yes, there looks like a blow off top there, but ultimately it is an uptrend. And of course, right now we're getting into supreme bubble territory with this. And I already told you guys, we should not be weirded out by a stock market crash in the year of 2022, predominantly around September, October, November of 2022. Because of Shemitah. Now, this trend right here, it's like if you look at a monthly chart and you just zoom out, this is over 100 plus years of data. It's hard to really determine the bear market, because if anyone's lifetime you put money in at any fucking time, you're pretty much up, right? Like at any time. If you take the year that you started working and plug it in somewhere on this chart, you're in profit unless unless you're 15 years old. Okay? So if you take any time you started earning money or you started your business and just put those put that money in the S&P 500, you're in an uptrend. Even if you live through this shit and this shit. Okay? And during your work years from 2000 down to 2002, you were buying a discount. Same thing here. During the housing market crisis, you were just buying a discount. Every month you were putting money in the market, you were getting a great investment price because you were getting in between 1,200 and 900, 800 conservatively. And then look at where you're at today, up 400%. So even when we're looking at the indices and zooming out and just seeing what it is, putting money in a market and not panic selling it at bottoms is pretty much the fucking way to go. Like, that's why I haven't been selling lately. I've been in the market for a long enough time now to the point where, and I also have a long-term investment thesis, and it's my thesis. I designed it. It's the same that I share in my course. This way of perceiving the market allows me to not get so worried about the day-to-day movements. We're in crypto. Crypto does these recoveries in half the time. Probably 3 times faster, actually. And the ROI after it recovers is like 10 times more, right? So you're in the winning asset class. When it comes to patience, you get to have the least amount of time in the market for the biggest result. I mean, geez, how much more lucky could you be? It's just a perspective flip. Like, listen to what I just said. When there's a dip or a crash, crypto recovers like 3 times faster, 4 times faster maybe, depending on the coin. And then when it recovers, the ROI is literally 10 to 15, maybe 20 times more than the market, the stock market. So you get to wait less during the worst part of it, and you make the most when it recovers. It's just a perspective. That's it. I really hope that helps, because it's what sets people apart from, just being gamblers. So the overall thesis in Bitcoin is based around the CME open today. We need to see how that opens. And ultimately, I'll show you the CME gap that I was just telling you about. For those of you that don't know what a CME gap is, that's completely fine. They do matter. They're not like something that I would put all the weight and all my money on, but they do have a purpose. And because we've shifted into full-blown, kind of negative sentiment mode, extreme fear, we could call it, there is this gap here on the closure and the open, filling in at around 32. And there's a premium difference here. So I don't know exactly how this is going to go. And the whole gap does not need to fill, by the way. We do not need to have a full fill. We could have a partial fill, and that could be good enough to get those orders in and taken care of. So we'll have to see how that all rolls, because this does play a huge role in potentially how this will recover. Because coming down to these levels and then just filling up that area and then having a V-shaped recovery from there would not be weird. I mean, look at this move here. This structure from high down to low plus the recovery. I mean, damn, it's pretty much the same if you perceive it that way. From top 69 down to filling up this area, this is 53%. Okay. So if we go from top to all the way at the low, I know it was 56%. So we're very similar to this complete movement here. And this right here generated this recovery right there, doing that for the 3rd time on Bitcoin. That would be, in my opinion, what would be necessary to facilitate the alt season for coins that are suppressed. Okay. When I'm saying that, I'm not talking about coins like Terra Luna. I'm talking about coins like Digibyte. I'm talking about coins like XRP or XLM. Those are the coins that will benefit from this bounce. Of course, coins like Phantom and, Solana, they will recover with any bullish recovery, just like they fall dramatically when Bitcoin falls. But during any bounce and recovery, you're going to have most of the liquidity want to shift into coins that have the most amount of ROI or alpha. That's just how it typically goes. And I'm sure a lot of other people out there who are analysts agree with that idea. Falling down in a straight line through every single support level is not typically how it goes. You have bounces along the way. So this sell-off has been extremely dramatic, but the time of the year that it's happening is that's what's not weird, because the end of Q4, you had tax loss harvesting, and now in the beginning of the year, you have people selling off because they were in profits a year ago. Okay? They're just deferring to the following tax year. All right? But this extreme dramatic price action we've been getting lately is just weak hands, people selling everything. And there's more longs entering this market than there is shorts. So people are longing into this dip. That's where the interest has been. Another thing, way too much leverage in this market. So the leverage, of course, plays a role in this cascading effect that we got the other night. Of course, I will not deny that. But what I'm trying to say is there's a purpose for the reason why certain times a year we have dramatic sell-offs, such as in sell in May and walk away, while we have the big market crashes in September, October, November. That has all to do with Shemitah. Then we have the end of the year Sagittarius sell-off. That end of the year is for tax loss harvesting. And then you have the beginning of every calendar year, which is people deferring taxes. So just pause what I just said, rewind it if you need that sound clip to play in the back of your head. It will help you a lot to understanding why we have big shifts in the market at certain time frames. Again, also in the modern age, we haven't seen many market crashes in the February, January timeframe. It's typically in the end of February into March that we've been seeing, for instance, the dot-com bubble crash, the C-word crash, had some bond market issues one year. So when we're perceiving markets from that perspective of why we get like the Q1 big market moves, well, what I believe, especially since the introduction of cryptocurrency was designed for these elites to just have a new system of moving around their money in a different way, practicing that for a full decade before they release it to the public. We're not there yet to release it to the public, but we're very fucking close. So what I'm saying is the elites invented it as a money system for them. They had us in the market participating so that we can test out the waters. They could develop all these systems such as Tether, having stable coins, for instance, moving around money in that way. We know the government uses USDC. That's fact. That's exposed. Okay? So we know the governments are using these stable coins. We know that they're using cryptocurrencies. We're hearing about cryptocurrency adoption in certain countries, predominantly just Bitcoin, really. But the purpose for this is because their fiat systems that they're using are failing. They're entering a hyperinflationary, basically a hyperinflation environment. So it's part of their way of hedging in that regard. And I'm not saying that more countries adopting Bitcoin is what's necessary to facilitate this market recovering. What really would make all of these markets recover is if everyone was a longer term investor. Because if we're going to have all this drama in the market, we're going to have people selling their bags. If people really believed in what they held, this market wouldn't have these 80, 90% swings. It's a cascading effect of people getting scared and selling. And if the maturity came back to the sector, we would see it lose the ROI, but we would also see it lose the drama. Okay? And that day will come, trust me, but it will only come when the average person is either priced out of the market or when the average person can no longer have access to investing easily. Right now, the average investor can invest very easily, and that's part of the problem. So I hope all of this stuff has been helping people kind of understand what's going on right now. Some more, information. Now, with Ethereum, we see that it came back to the 236 fib. That was a classic level to retest. It was the W breakout neckline. So holding that level is very, very important, okay? It needs to hold this 236. And now let me go back to the prior bull run so we could look at how this all went for XRP during this time frame. So this was the time frame of June 2017 to the end of the bull run back here in January. Let me zoom out and kind of look at structure. Let me turn off the drawings. Let me make this larger. Okay. So now what was being perceived here was this idea that this first run up top was very similar to this top right here. So you see, we just moved up from this low, straight line pretty much, kind of similar right here. Or you could just call it from the C word. Boom. Topped out, had a very like Christmas tree like syringe top. Then you come up for another peak, build a little bit of a base, and then you make your final run up. Okay. And this final run up, you top out with another sort of blow off top looking structure. So far here, we haven't had that blow off top structure. We did back here, but we made a slightly higher high. But what I want to examine is how during this period of time, we did have this dip right here, this move down to this level. And if we disregard this big liquidity wick, this was just a error on Coinbase. But if I pull a fib from over here to this sell-off, now this cascading event to the downside would be similar to what happened right here. Okay, so again, let me zoom out and show you. So you have your big run up, boom. Here, big run up. Excuse me real quick. I just don't want to clear my throat into the mic. So you have your run up, you have your sell off, run up, sell off, and then once you get broken up into this golden pocket area, you still had a retrace or return down to the 236 before continuation of your retrace. So you see that move right there? That was right within the 236, and that could be what we're getting right now. You see? Move down into the 236, and that was short-lived, by the way, because pretty much within, let's just measure till it got back to that top. It took about an additional 70 days. Now let's just say for us it's going to take 90 days because of the fact that it's extending out. Now that would be akin to like getting back to the all-time high by April 22nd, if we were to perceive it as a very similar sort of move. Now that's hopium, but I'm just letting you know this has happened before where we saw ETH come up, big sell-off, recovery, and then again a retest of the 236. And if you guys remember, when we recovered over here, after the dip in July and we started moving up, I was very weirded out by we weren't backtesting the 236. We came up, we backtested the 382, but we never came back to that 236. And typically that's what you do during your structural move. You come up, maybe get rejected by the golden pocket at the bottom, and then you have your 236 retest. After that, you get into the golden pocket, get closures above the golden pocket, and then enter price discovery. This was a premature breakout, came down to only the 382. Then it just thrashed to a new all-time high bull trap. Okay, and even the bull trap had a bull trap, and that double top shit that happened was a huge fake out because a couple days later it just sold off on the 4th of December. And this whole time frame, ETH was looking really solid, whilst Bitcoin wasn't. And ETH was the dominant player in the market at that time. And since it broke this yellow trend line that I was telling you about week after week after week, it created that cascading event. So breaking this trend line followed by a rejection off the 618, that was where we started to notice, okay, this is a problem. And then this bigger sell-off right here is of course 100% in alignment with what Bitcoin does. Bitcoin having a huge sell-off creates a sell-off in everything else. So I just wanted to show you guys this comparison back to this time frame and how we might be extending out slightly. And the ultimate hopium would be the 3618 4236. This is, again, I don't love talking bullish at a time where we're bearish, but that would be the move in the event of a true alt season. But again, that's not something to talk about while we're down so much. We need to talk about realistically what's happening right now, and that would be holding that 236 area and then eventually recovering above that 618. Getting above the 618 at 3,300 would be similar to Bitcoin getting above 44,000. So if Bitcoin gets above 44,000, the odds are Ethereum would be getting above 3,300. They're very, very similar in terms of price structure and recovery. And then I would look out, obviously, for this trend line because this trend line is in the golden pocket, and that's the area for dead cat bounce and the end. Still, even though, if we're going to see a rotation into the altcoins and ETH is going to recover 100% off that bounce, or let's just call it 60 to 70% off that bounce, that would be dramatic for the rest of the altcoins because, of course, Bitcoin or Ethereum has the second biggest market cap. So just wanted to show you that comparison because it could be something. Another thing, we have oversold RSI levels all the way down to 20. And let's look at the C word. So this right here, this dip is the C word crash. Do you see where the daily RSI was? It was 22. It went lower yesterday. It went to the lows, double tap. So this is dramatic. This is so dramatic. It's too much leverage, man. Way too much fucking leverage in this market. Okay? We're more oversold yesterday on the RSI than we were during the fucking C word crash. Is this telling you guys something? With extreme fear in the market? I mean, I know what it's telling me. Like, geez. This is a huge dramatic shakeout, and I suppose it was necessary to get the right players in this game and the wrong players out. It's noticeable. So I am definitely interested in how this structure is playing out compared to past structure for Ethereum. When you're seeing an RSI of below 20 or around 20 on closures, that's definitely a sign of this is dramatic. I'm sure if we started examining this on, are we oversold on the 3-day? Mamma mia. Look at this. COVID, where we are today. Look at how we double tapped to the bottom of December 2019. That's the bear market bottom. Dramatic. Absolutely dramatic. This is the 3-day RSI, guys. So again, this is too oversold. Look at the MACD on 3-day MACD. Look at that. It's at negative 300. Like the charts and the TA, it's showing you what's going on right now. This is ultra weak hands. Ultra bearish because of leverage. Too much. It's too oversold. Okay. So, I mean, I don't know what else to say. Again, nobody can prophesize exactly how this is all going to shake out. But when I'm seeing RSI at like historic lows, MACD historic lows on the moving averages, it's just, and then on a 3-day chart, we're not talking about like a 6-hour or a 12-hour. We're talking about 3-day chart, guys. And on the second biggest market cap crypto, ETH. So we're not talking about fucking Shiba, right? This is all should add up to how we should perceive the market, which is don't get crazy bearish at a time where all of these things are signaling to us, hey, like this is dramatically oversold. This is like the C word in a lot of ways. And also all of those connections to the 666 with the C word. That's all there. Been making those too. So could be something very similar. And to what that generated. And I mean, dude, this sell-off happened with no deaths. Like there was no statistics yet. This whole sell-off was just because of market drama back in March of 2020. This is where we had the deaths. This is where it was like every day they were like record-breaking new COVID bullshit. And what did this do? Just fucking beautiful uptrend to the sky. But this was the market sell-off where they had no data. They were just going off of their prediction models. And I'm not even saying these deaths and statistics were real either, because people were getting into car crashes and they were swabbing them and, you know, calling it a C-word death. It's like this guy got into a car crash. Like, that's how insane this world is. But I'm just letting you know, man, like, this dramatic sell-off right here that we got, the data is set in stone now, and we have over a year of 2 years basically of chart history showing us what's going on, which is that this is pretty crazy that we're seeing RSI getting all the way to 28 on the 3-day chart. The worst thing people do is flip crazy bearish and panic sell everything when it's about to reverse. Not saying it will reverse. I'm just saying we have the chart here showing us plenty of information. So this is XRP. Going to quickly go through this one because it's the same story. You know, we're looking at, again, pretty much supporting on these prior lows going back to June and July. And this is a setup that is very important to hold, this level right here, because this goes back to the prior high before the SEC dump and the recovery highs before the slight backup phase that we had, which led to the initial SOS in the market. This SOS phase, again, we're in a huge backup phase right now when we're talking about like a 4-year chart. So, of course, you have your buying climax. You have your selling climax, which was supported until you had your spring. Then after your spring, you have some time where you're recovering off of that spring and getting back into your support levels. Then you have your first SOS, LPS, SOS, LPS, and then this right here was starting a new trading range, basically when you get a lower high. Now you have your lower high and you're still maintaining your higher low until we start trading below 50 cents on closures, you know, then we're still maintaining this level. Now, what this does look like, though, is a new, if we were to make a new Wyckoff structure by zooming in here and calling this the buying climax. So you have your buying climax, then you have your ST supply test at the top. This would be like a reaccumulation after decline chart, by the way. Then you have your selling climax right here, automatic rally. You know your automatic rally because it's a lower high. Then you have a little bit of a rejection, come back down, and then you start to see how you respond to prior lows, the lows of the selling climax. This is where you have kind of like a decision to make. Is this going to be just a supply test at the downside, some sort of last point of supply, then recover, or are we going to have a direct double bottom somewhere around coming down to the prior lows, like exact lows, or are we going to create a spring, which would be breaking structure and coming down for that depression phase? It's a quick V-shaped recovery depression, just like here, where when you dump through there, you make the whole market uncertain who's invested in this thing. And that could be very similar in structure. If we were to go back like this, we might be seeing something similar where we have peak followed by correction, peak, correction, and then you do have a break of structure. That could be possible, something like here. Peak, retest, prior resistance, come up, low, low, and then once you broke this structure right here, you start looking for the double bottom. That's the best it gets, besides the spring. The problem with the spring is when you're living through it, it's fucked. It's kind of like what's happening with Theta right now. Theta is having a spring in Wyckoff, the absolute blood in the streets. When you break structure like that, you could easily have a 20% additional sell-off, and then that could recover off of that in a V-shaped recovery, which might take, 2 to 3 weeks, and you could see 100% gains off the pocket lows. So I don't know, that might be a lot of information, but that's the technicals. That's essentially how it's going to go depending on how Bitcoin recovers from here. So if CME opens and it's bullish and we push Bitcoin back up to 37, 38, and then on the weekly open, moving into the stock market with Monday, Tuesday having somewhat of a relief rally from their sell-off, then we could see Bitcoin getting into the 40s for the monthly close. Like literally, we can see it come back, and it would make a lot of charts almost look like we just experienced a spring in Wyckoff, some sort of depression phase, if you wanted to like consider it like the Wall Street cheat sheet. I'll show you what I'm talking about. If you guys want me to make a video on this, I will. But I mean, it's pretty self-explanatory, and I've already done this in my course. So you have your blow off top, sell off area, and then right here, this like depression phase where you see this V shape. I mean, this shit looks exactly like the XRP chart in the macro. I'm gonna turn off all this stuff. I'm sorry that I can't bring up the chart side by side, but just I'm going to put these tabs next to each other and you're going to see. So you have your blow off top, come back down. This is where everyone's mad, anger. And then you come back up, a little bit of a relief rally, but it gets rejected here. Relief rally, rejection, come back down. And then this V-shaped recovery area, you see how it looks the same in XRP? Boom, boom. And then this whole phase is depression right here. Because this whole phase was during C word. There was a catalyst and a reason behind why we were all down. Okay? And then it goes back to disbelief right here. It cycles back to the beginning. And then you have your hope phase into euphoria recovery, and then you end up back here. Okay? So then I'll show you it from the perspective of starting on the left. So here was hope. Boom, hope. After your disbelief. Then you go to optimism, belief. This was the, well, I know we had the SEC dump. So, of course, on this coin in particular, it has this ugly phase. But if you just bear with me, if this was a black swan for XRP just particularly. If I was looking at the Ethereum chart, it would look all kind of a little bit more clean. But regardless of this, during this phase right here, we start to enter this belief, thrill, and then you have euphoria at the 195. And then you have, again, complacency. This is the bear trap, and that was right here, the bear trap, before you have an additional sell-off. And then that sell-off again, you have the double bottom, you see right here, anger, where it comes down, straight line, bottom, comes back down again, boom, double bottom, okay, boom, double bottom, and then relief. Now, this relief here, this is a stock market, so it doesn't have the dramatic automatic rallies like we get with crypto. Crypto has very dramatic automatic rallies. You see where like we literally can pump up 100+%. You've even seen some altcoins have an automatic rally that's like 300, 400%, fucking super dramatic. And this is for stocks. So obviously it's a lot more suppressed looking. It's a lot more squeezed down. Also, this time frame could be 10 years. Whilst this time frame right here, we could like literally you could break it down to 2-year intervals. But I would say right here we are in this depression phase for the altcoin. For any suppressed altcoins, we're in this V-shape area, but we're at the bottom. We're like revisiting anger essentially. And again, this is not how I feel. This is just how the market feels. This is the psychology of a market cycle. It's written right there. And of course, they have that all-seeing eye for Wall Street. But yeah, I hope that clears some things up for you, because we're about to cycle. I mean, if we were to look at this from a perspective of Wyckoff, this depression phase should actually be a spring, which is what Theta is going through right now. And if I show you just really quickly on Theta, you'll see kind of what the hell I'm talking about. And this is a lot more similar, where we have cascading events at the downside, anger. We have some sort of weird double bottom. And then here we have depression, boom. And then V-shaping out of that and recovering above anger, which was right here, would look exactly like a spring in Wyckoff. And then you have a SOS when you get above the prior structure highs, which would be about $8. I mean, that's a fucking crazy relief, but that's what happened during the C word. We had to completely get oversold in all regards, like we are seeing with a bunch of altcoins right now. And then the recovery out of the pocket was what brought some relief and hope to the market. And right now it's in complete shambles because of, you could see on Fear and Greed Index, it's pretty much at extreme fear. I mean, it might have even gone below 10. So anyways, that was my breakdown of XRP. It's just all about Bitcoin right now when it comes to the structure. But the structure of XRP and what I showed you with the Wall Street cheat sheet, it could be something that you could use alongside a couple other charts for any coins that you guys are in. So let's go to the first altcoin of the day, which is Helium. Ooh. Okay. Oh, I'm on a 3-day chart. I was like, well, it looks great. Oh yeah, this does look really good. Okay. Beautiful. This doesn't look bad at all. I'm going to go pull my fib as such. And then I'm going to pull down all the way to the low. So we have from swing high to swing low. First, we always start by measuring the amount of losses. Ooh, this did really well. Wow. Congrats to this coin. Now, this isn't good. This part. Whoever was in this, you should have gotten out above your 2618 because you can see the clean rejection off the 3618. Okay, so that's definitely something to keep an eye on. And then out of the okay, so there's not a ton of chart history on this one, guys, but this I do know this is the best chart that we've gotten, about 18,000%. That's great. I don't know if this was invented or if this was trading on the market before the C word happened, but going from 20 cents to $22, that's a dramatic move. Now, what we're doing now is you see once you break the 1618, you start to break structure and you revisit the golden pocket essentially. Or let's just say the golden pocket is like a magnet. It wants to suck you back in and it goes right back. And you see it actually bounced off the 888. So that's a strong sign too. So this chart across the board is looking very strong. If Bitcoin and the rest of the alts are going to recover, this will recover too. You just want to keep an eye for the prior highs, which is around $45, and then getting above that, you really don't have too much more for this to go. I mean, perhaps 71 to 84 on the final move, perhaps. So that means if we have an alt season, it's going to look something like where you come above the 1618, probably back test, and then you have one final move like this, and this will be the blow off. Okay, because that's about the level that you get to, the five to six, and given that it's held structure without any major sell-offs, like it only had a 60% dip from buying climax to selling climax, this also doesn't give it too much more room to go up, meaning the more you are oversold, the more dramatic your dips are, the more dramatic your pumps are. And this one hasn't had a huge dramatic dip on the sell-off back in May, only 60%, whilst a lot of other altcoins have gone down 85%, 80% on average. So that means they have more of a recovery. But the fact that this one made it up to the 3618 and got rejected, that's a sign to me again that confirms that this getting much higher than the 0.5 fib is unlikely. So with that being said, from a structural perspective, coming and back testing the 1 fib and the 888 is a very strong thing because that was all your prior resistance. And that's what you played around with here before the actual breakout. So these levels getting back tested with a clean bounce would definitely be nice. But if you're in this coin since going back, and you guys have been hearing me say this a lot lately, when I say this coin looks good or this chart looks good or we're trading up here above the golden pocket, you keep hearing me reiterate, I hope you're taking profits. I hope you're de-risking, because I said it about Solana, like everything. Terra Luna, I said that about the Phantom chart. There's so many coins where I've brought up back when we were at pretty much all-time highs in these coins to take profits, right? That's always my mantra. When I'm seeing a coin get it overextended, I'm all about taking profits. And I always push that idea of de-risking. And anyone who's listened to any of that across the board at least was in a safe position when you compare it to today. You could see you might not be perfect on the week. You might not be perfect on the day. You might not be perfect at the exact top, but at least you're making money, protecting yourself. When we got the big push of prices back in April, I took a ton of profits on all of my coins that I had. I de-risked everything. I mean, that's almost a year ago now, but I did that on purpose so that I could reinvest that money back into the dips. And that's exactly what we did back in June and July. June and July, we were buying up all those dips and then de-risked again back on Rosh Hashanah. Again, great how that all worked out. So you need to play this from the long time horizon, because the longer you stay in this market, you can see like this coin was one time 10 or $1. Okay, it had a trading range around $1.50, and this lasted for about 160 something days before the parabola, and then again another trading range sideways of about 100 something days, and then another move to the upside. So this is a great coin for people to dollar cost average on any bigger dips. But when we're seeing this overextension, and again, like if we were to pull a more dramatic fib like this from this trading range, you're going to see that this topped out around the 12-13 spot fib extension. So that's fucking a very high move. I would not be banking on this to go substantially higher. It's kind of done its move. Anyways, Helium token getting a recovery above this level right here, 35 would be great. start building some structure, but ideally it's that 45 peak right here, that 45 peak, and I would expect a run up to the 4236, maybe the 5 spot fib extension if you're lucky. On the downside, if this thing cannot hold 963, it's going to start breaking down into the golden pocket, and that's really where it could get messy, and this will look like a blow off top. So let's move on to compound. Actually, crypto.com coin. We're going to talk about that one first. That's the way that I have this written out today. Okay, so crypto.com, a very, very similar thing going on right now too. You can see that we've started to break the 1618, so that's a sign of weakness, and this looks like a blow off top to me. This is it. I think this is over for crypto.com. I actually said this back when it did this move too, because we covered this coin probably like a month or so ago. For anyone who remembers what Red Pill episode that was in, you can leave that in the comments. But once I saw it getting to this 4236, I mean, you see what it does, guys. I don't tell you this level for fun. It went and swiped through the 4236 to almost the 6 spot fib extension in a single day, and then started a downtrend. This shit's quick, guys. Like, it's fast. So when I say the 3618 is where you want to start, like, getting out, don't get fucking greedy. Yes, it could go to the 6, but do you really want to risk it when there's only 3 days of like a syringe top? It's not smart. So here you can see that if Bitcoin has a little bit of weakness, whilst this is already in a downtrend, that's all it takes to push it through structure. So where it bounced was the prior level of support here on the bounce going back to November 10th. And that area is like in thin air. This is like thin air between this level and the 888. And I wouldn't even be surprised if this liquidity wick right here was real, because where it went down to was a textbook level, just like what we saw in the last chart, this 888. And that would be off of top. That would be an 80% loss. So you really, really want to be careful in coins like this if you haven't de-risked at all. Again, if Bitcoin and the other cryptocurrencies recover, this thing can get back to the point, the 58 cent level. I mean, here's another thing you could do. You take your fib and you pull. And then it's this 0.5 area that you want to start getting the hell out, and you see where that is right here at your peak. So the 65 to 73 cent level would be a blessing, but I don't believe, I mean, it would take, yeah, it's possible with ETH recovering, especially if ETH makes price discovery and starts getting into $5,000 higher, which is again hopium, then that would be potential for this coin to get back into the 60s, maybe 70 cents. But the odds of it making a double top and going higher are much more slim, probably 10% chance or less. This was the all-time high blow off top, and this is the end of the run for this coin, and probably would be lucky to get 65 cents to 70 cents for a bull trap rejection to come down. So given this is probably getting oversold in the RSI, it is. So you could see it got to 23 in the RSI, even at all-time highs. But this is just the daily. If you start examining the 5-day, weekly, you'll see a different a different idea. But you see 90 RSI on the daily in correspondence with the all-time high. That's how blow-off tops look, guys. That's how it ends. Oh yeah, this is it. Look, 93 RSI on the weekly with a blow off. That's it for that coin. So anyone who's still in it, you know, you want to really pay attention to what I'm speaking, this TA that I'm sharing, because if you had all this TA in the back of your head, or I mean, I really do need to push out the exit strategy stuff in the month of February. I promise I will do that. People need it. I know they need it, because so many people are getting trapped in coins that have made blow off tops. And I've gotten many people reaching out to me for that. And it's been something that I reiterate a lot on random videos and in random moments here and there, this exact execution of the play. But I know sometimes it helps people best when there's just like a video format labeled for the exit strategies. I know that's kind of the way that people learn best, when it's just very short and to the point. So we're going to go to compound. So compound is making a spring in its structure. This might also be the end of this coin. No, that's not a dramatic enough push to the top. So this breakdown here is not as bad as theta or sorry, it's worse than theta, but it's very similar in that regard, where you had some of the support level coming back into the cluster of trading in the prior fractal before the blow up, before like your first big buying climax, and you've returned down to those levels. So not holding the structure at the wick from the summertime gets you to have a more dramatic sell-off, and that was what I was saying before. I forgot what coin we were talking about. There was some coin that XRP. I was saying, like, if you break that bottom, you can lose 20% value very, very quickly, like in a single daily candle, just because that is the main support, and you had a parabola moving out of that. That's what you're moving back into. It's not a fun time, but again, that blood in the streets moment where you have that oversold RSI hitting like rock bottom levels, that's a sign to, everyone's bearish on it, everyone's left the project. That's typically where the stable coins like to flood in. So on any bullish recovery, you're most likely going to see this have a little bit of relief, but it's a ways away, to you would need to form a long-term trading range, something where it V-shape recovers very soon, getting about 250. And then in Wyckoff, you have your test, which looks like this. It's like a little sideways. And then you have SOS is when you break this high right here. After your SOS, you have back tests. And then you have continuation. That would be the structure. So anyways, at this time, this thing's cascaded to the downside. Pretty much the only thing you can do is take a bearish fib off the breakout to the all-time high. I know what the level is. It's right here. And you've even gotten below the 888. So there's really it's thin air. This thing needs to have bulls step in, and the coin was mostly weak hands. So it's had a dramatic sell-off. This was a DeFi boom project. Like, it had a huge boom because of the DeFi sector doing so well back when like Chainlink was kicking ass. That was probably a year and a half ago. Now it's suffering because nobody has any interest in that sector. So yeah, there's really not much to say about Compound. It's just broken through structure, straight line down. It needs to have some sort of relief from here, some sort of bounce, and then that would be called the spring. And your spring, you're probably going to get rejected at 250 and have a little bit of a test, which is like a sideways kind of building support level before you get any recovery further than that. Let's move on to BitTorrent, BTT. Okay, so this looks very similar to XRP. Geez, it's almost identical with less dramatic spikes. I guess the only thing about this, what the hell's going on here? Oh, shit, that was weird. Okay, so with this coin, you have from C-word lows up through pump about 8,000%. That's beautiful. It's a nice move. Does it have a prior bull run? Not really. It just kind of hit the market and went on a downtrend, which a lot of coins do. But this structure right here of having this W bottom breakout, automatic rally, kind of, this thing is very nice to see. The structure that it's built, holding that 002 level. So this is, I mean, it's really as good as you're going to get off of the breakout level, which goes back to that level right there. You could see I pulled from the breakout before the straight line, and you could see we're dancing around that 888 fib, which is a level that I teach everyone. So you could snake around that level, and that's about as good as it gets, especially when you compare it with oversold RSI. That's really where you want to take action on a coin if you're building a bag. So you can see during this W, when it went below the 888, both times back tested the prior resistance highs, and then you can see oversold RSI at that time and a little squeak of the RSI oversold there. Here again, oversold RSI, and you pretty much are back at those levels right now. So for any bag builders out there, like people that want to build new projects and want a coin, this is kind of the stuff you want to look out for. But remember, this can very quickly turn into a spring in Wyckoff. Very, very quickly can turn into a spring. Test, SOS, back up. This can very quickly turn into a spring, okay? So this is where you start building positions, okay? I say that because people think that you should just go all in. No, I personally do up to 25 investments per coin. So this would be like my first 5 buy-ins would have been boom, 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 boom. At all of these exaggerated sell-off levels, we can use RSI in the daily to determine that. Anything below 35, anything below 35 is like pretty fucking lucky. It's great to have actually. And then once you get below 30, you can go to 20 very fast, and that's typically in correspondence with the support level, which right here would be the spring. So you have your spring, and then here your test. You could even continue to build your final pieces of your position. Once you get into the the SOS phase, that's really where like things can get quickly recovered. We've seen it happen before, especially after a spring where you have a massive wipeout. That's where you want to bite. It's just hard to determine. It really is. It's so difficult to determine, is this going to be a spring or is this going to be a double bottom? You know, that's really the game. And it's tough. It's tough. That's why I don't try to buy just the spring. I try to buy as much as I break up my whole investment into many, many, many buy-ins. So if I do get a spring, I could use the 10 to 20 days of that V-shape spring to be averaging in a majority of my play. Especially if you're seeing something weak, seeing something that wants to spend a little bit more time on the downside near support. We're going to look at Hedera hash graph. This one got the most votes on the red pill for some reason, even though we've covered it quite a bit. But again, I'm just going to quickly run through this one. Coming back to the 236, that's very nice to see. There was a little bit of a Christmas tree breakout on this, but it never even got to the 1618. So this isn't very compelling for the end of this coin. But I mean, yeah, even only 1400%, that's not very compelling that this is the end. So this Hedera hash graph, I believe, has more room. I still see it up above $1 for sure. If this is going to have a full-blown market recovery, of course. I'm not saying it will 100% go to $1. I'm saying that if it recovers and the market starts entering that alt season that we talked about, then this would be one of the coins that I would consider would be eligible for that alt season. And after backtesting the 236, this is something to be said here in holding structure. If it closes below the 236, similar to Ethereum, we're going to start seeing this want to retest the prior lows in the structure, which would be somewhere around 15, 16 cents. But at this time, backtesting the 236 area, holding that's completely normal. That's the most, pretty much the best support level that you could locate is this, or the 888 if you're going to do a bearish pull. So if you do your bearish pull, you would want to catch your investment on the 888. So you could go from here on the breakout and go to prior all-time high, which was right there. And you see that wick right there? Boom, 888. It works every fucking time. It's crazy. So right here would be your breakout. Pull the bearish retrace up to your all-time high. Oh my God, it's so good. Look at that. From the breakout to the all-time high, you see that wick? Boom, 888. Works every time. I think that changed a lot of people's lives when I taught the 888 fib to people on the bearish retrace, because just that right there has been an eye-opener from a technical perspective. And when all those people out there saying technical analysis doesn't work, well, it's because you don't fucking know technical analysis. You don't know what you're doing. You don't know what you're even saying. So of course, but then you see that you keep up with these videos, and how many times have just using the fibs been so beautiful when it comes to where to invest regarding your 888 fib or the golden pocket on the bearish retrace. Combine that with the RSI and you get fantastic results. The same thing goes to the upside. If you start seeing you're overextending over your 4236 and you combine that with above 90 RSI, and then on the weekly it's like 91, 92 RSI, that's been a beautiful time to get out. And it's really undeniable at this time. So even the most basic TA could be absolutely mind-blowing. I mean, that's not including Bollinger Bands, how to actually properly use some of the moving averages and the moving average crosses. That stuff's all stuff that I teach in my course, of course. But it's amazing how many people, when it gets to a bearish time, they say TA doesn't work. And it's like, yeah, because you don't know what you're talking about. Technical analysis is always working. It's just about how do you use it. Right? Like if you don't know if you're not a mechanic, why are you talking about how to fix cars? Right? Like, anyways, I'll keep it moving from that, just because the amount of ignorance that I've heard with TA regarding when we enter bearish time frames, it's amazing. When we're bullish, it's TA is amazing. It's nonstop. People just talking out of their ass. They don't actually really know much about what they're saying. And the ones that actually see TA for what it is, which is being able to utilize data from the past and basically momentum tools and lagging indicators together to be able to formulate what is the most probable outcome. That is all it is. It's not much more than that, guys. So Hedera holding 236 is important. Recovery above this level right here, the golden pocket, 33 cents. That would pretty much be where I would get ready for this thing to recover to a price discovery. So ideally, you would want this level, but it's typically any closures above the golden pocket after the second attempt of the golden pocket, that is really where things ramp up. So Hedera gave its investors like an extra 2 chances. I'm not even saying that there might be a third chance, depending on how the month of February goes. But yeah, this is still looking okay. It hasn't had a crazy run up since the start of last year, and it barely got into price discovery. It just barely got above all-time high, which is similar to what ETH did and similar to what Bitcoin did. But because Hedera is a lower market cap, I mean, it should take advantage of that final alt season blow off top in the event that we get that. And then just the quick note on ZIL, because that also got voted highly, and we'll wrap it up with this. So ZIL has entered a spring, okay? It's very quick, show you. So we had the all-time high, then you have your selling climax, automatic rally, lower high right here, rejection. Once you got below these lows here, come up into them, rejected off of that prior support, so it's flipped as resistance. So you want to keep consideration of 8 cents now, because that's a key level to get above. And you've broken down below the lows. So this breakdown below the lows right here, this is where we have the spring. So I know this is the arduous period, but typically these recoveries, when they recover, so that'd be about 8 cent level would be the V shape. And then getting above that, you'd have something like this. And anyone who has access to the Wyckoff schematics, you know what I'm talking about with this. So once you break below your support lows, these are called springs, and that's typically corresponding with an oversold RSI, a dramatically oversold RSI. So if we go back to the C word, 20 right here, look at this. So the March 2020 lows, C word, we actually are below that right now. We've dipped below that, and the RSI that we're matching is the RSI lows that came into 2019 in the bear market. Okay, so this is very dramatic again, showing you that this coin is going through the ringer with a lot of other altcoins actually, where they're just hitting these crazy lows on RSI. I mean, even the top coins are not impervious to this. Like we're seeing it happen with Ethereum, like I showed you a little bit earlier. So that was just my quick thoughts on ZIL. This is a spring, and Wyckoff most likely will know by a recovery above 8 cents, but this could take some time, and we don't know how long it's going to take for this to recover. April was sort of the time frame that's been on my mind. It's been on a couple other analysts' minds that I've spoken to. We're kind of just chilling, you know, kind of have to wait through this time period because it's very similar to the COVID crash. And when we had that COVID crash breakdown, we know what that generated. I mean, and that's the hopium of it all, but that is typically how it goes. When you have an extremely oversold market with tons of the retail players leaving, it allows room for the biggest players in the game to step in, and they step in with leverage that you couldn't even imagine. And I'm not talking about just leverage like 3x, 4x, 5x leverage. I'm talking about leverage of being able to borrow billions of dollars, to borrow billions, okay? And that's a completely different ballgame. That's what allows these crazy moves to happen. So what we're going through right now on a handful of coins is one of those things where you just kind of got to sit tight and let's see how this week opens in particular, because the stock market's looking like shit and the stock market's due for some relief. But that's not to say that we could have just basically a little bit more negativity, because Bitcoin still has this prior range down here, 31K. It could drain out again. And if it was to do that, of course, that's going to bring more pain to the altcoins. We don't know what's going to happen. Nobody knows. So far, the last big date was this 22nd date. As for that, we don't have anything coming up, in my opinion. Maybe the 26th could be something because of the 69 date and also the 15 standard date numerology. That's important. The 15 has been major in my work because of the tiger and the new variant and all the other things that I've shared. So, but until really the 29th, I mean, this could be a day as well because we have that 72 and the 18. 18 is a big number in Judaism, and the 72 is the Bitcoin number. So that's another thing to be said. I mean, I'll break down all the dates if I make a video tomorrow, depending on my voice sounds. I'll try to cover the dates there. Okay, so we have, this was the next big one, the start of Chinese New Year with the 333 days. And I went over this in my last video. I'll make probably a new Patreon video to recover, to basically go over some more of these connections. But this transition into Year of the Tiger, definitely going to play a role in how finances are moving forward. So going to be interesting to see how we've been selling off into that time frame. I wouldn't be surprised if we recover through that time frame in the transition. And then, you know, I don't want to speak too ahead, but falling line breakdowns typically have bounces along the way, and we have yet to see a bounce. So that, coupled with oversold RSI, it's pretty much the time frame where you anticipate some relief. Anyways, I hope this episode has been informative. The start of the episode definitely wanted to reiterate my position on bull and bear markets, which is that they don't exist. It is all about where you entered the market, and the most patient player in the market is in a forever bull run. As long as we have a fiat-based quantitative easing system printing away, it's all about patience. And it's hard to be perfect in a market, especially one that's so volatile, because you feel like a genius when the market's going up and then you feel like a loser when the market's going down. But that is not how you should perceive yourself. That is not how you should perceive your investment thesis. You are a long-term investor who got into this to have a lifelong skill. And part of that lifelong skill is riding the waves. There's going to be tidal waves here and there. You're going to be faced with them, and the way you react to those tidal waves is what allows you to make it through to the better days. Living through the worst of days, like what happened back in the C word, and perhaps what is going on actively at this moment, or even those people that joined this community back in April and saw what this whole time frame was like through May and June, you've been through it too. So we've been living through these big epic moves in the market, and it's the players that are here for years and years to come that are setting themselves up for financial freedom. The people that are here for a month or 2, 3 months and getting so caught up in the specificity of the matter are not taking action on the plays that they're actually winning on, or they're not taking action on the best opportunities of when to buy. And that's not me telling people what to do. That's me just basically talking about basic psychology. And when we were discussing the Wall Street cheat sheet, this could be helping people understand a little bit better about how emotion and sentiment of a market plays a huge role. When you enter this depression or anger phase, that is typically when you have the worst of it. And perhaps that helps some people to be able to be a little bit more calm and be a little bit sharper about the way they perceive this market. That is all I ever wanted to do. And also, appreciate everyone's support lately. Last wipeout we had yesterday was a lot less dramatic than when we saw wipeouts before. That's great to see. It's great to see that people are helping each other and reacting to this positively. I love to see that in this community because it's a sign that the washout of December has left the right type of person. And that's what we need. We need the majority of the players in our community to be ones that are providing value. And I appreciate all of you for providing value, your value, whether you're a farmer, an astrologer, or somebody who's just digging up, decoding information for us. You are an asset to this community. To all the mods out there, Jody, Jim, David, I appreciate you guys. Soda, you guys are beautiful and helping this community thrive. It's amazing how we can be so strong during a time where the market's down. It's made me feel so proud to watch what I've built. So I'm really grateful for every single one of you. I have so much love for all of you. And please listen to this episode from the heart, not from the mind. The mind is where things can get, confused and maybe even want to react emotionally. This is the red pill episode, so it's for people who are ready to take the red pill. I probably should have said that at the beginning because I know that there were some things that I said at the beginning that might have been a little sharp and maybe hard for some people to bite onto, but that is how we learn. We learn by having somebody who's sharing wisdom, and we're able to react to that with gratitude because we've actually learned something new rather than being told something that supports our emotional bias. And that's not the way that I play this game. I am a straight shooter, 100% truth, telling people how I feel about everything that I do. And that will be my mission statement until the end. And we're just getting started here, seriously. It's amazing how we've made it through 43 Red Pill podcasts. And wow, the amount of coins we've covered, the amount of data that we've collected, so much to be learned just from these Red Pill podcasts. So for anyone who's stuck around this long, probably have had a wealth of information that has completely changed your perception on the market. And that is really quite a beautiful thing. So I'll leave it at that. I appreciate every single one of you. Have a beautiful rest of your day in the Matrix. Much love.